Hi everyone, and welcome back to our channel. Today we're going to dive into a really important topic for anyone navigating Canadian and USA taxes, and that is the Canada-US tax treaty. Like most countries, or many countries, most countries are trying to get tax treaties with most other countries in the world, and the Canada-US tax treaty is very commonly used because there's so much back and forth between these two countries. The primary purpose of this tax treaty is to avoid double taxation and to avoid tax evasion for residents of both of these countries. The tax treaty plays a crucial role for individuals and businesses involved in cross-border activities. So let's break down some of the key elements. One of the main features of the treaty is the allocation of taxing rights. Your country has a right to tax you, generally speaking, on your worldwide income. And generally speaking, then other countries where you're not resident can only tax specific types of income source within its borders. I'm going to go through the tax treaty um, section by section, article by article, and hopefully not take too long. Some articles don't take a lot of explaining and others do. So we start with the personal scope, basically saying this covers all individuals, all persons, remembering persons include corporations. Taxes covered. This is specifically an income tax treaty. There are other treaties for pension taxes, employment taxes, payroll taxes, excise, and goods and sales taxes, and that sort of thing. There's a general definitions article, and then we get into residency. So residency rules get really complicated sometimes, especially when you have ties to both countries, or it's vague or fuzzy when you have moved from one country to another, or you have a foot in both countries. The tax treaty provides tiebreaker rules to determine where you are a resident. It considers factors like where's your permanent home, where's the center of your vital interest, your habitual abode, your citizenship. Other minor things can be, where's the majority of your bank accounts? Where do you have a driver's license? Where do you have a health card or health insurance? The next article is permanent establishment. This is more for businesses, but this treaty defines the concept of a permanent establishment, which determines when business profits can be taxed in the other country. The real brief overview is that if you're a Canadian company and you set up an office in the US or a sales floor in the US or a manufacturing facility in the US, you've now opened yourself to being taxed in that other country. There's an article on income from real property, real, which means real estate. You're an American and you've got rental properties up in Canada. This deals with that sort of thing. And we've got business profits, which just, once again talks more about where your business is going to be taxed. Generally speaking, the tax is supposed to be applied where the business activities take place. So, you do a bunch of manufacturing up in Canada and then you sell into the US. You're not doing any activities in the US, so your taxing is mostly happening up in Canada. Unless, like I said before, you establish a permanent establishment in the US. Then we deal with transportation, which deals with trucks, trains, and ships that go back and forth between the two different countries. We have related persons, which would deal with, a salary paid to a sibling, a spouse, a son, a father living in the other country. Probably, yeah, generally speaking, you get a reduced withholding rate on something like that. Then dividends. Dividends is an important aspect we deal with quite a bit, and actually the next two articles as well. So there's dividends and then interest and royalties. There's a withholding tax rate on these, in either country, from U.S. to Canada or Canada to U.S. When you're paying dividends, interest, or royalties to someone in the other country, there's a withholding tax. But the IRS and the CRA websites specify a rate, but the tax treaty usually specifies a lower rate than what you see on the CRA and the IRS websites. This is why it's important to know the treaty, and then what you need to do is claim the treaty benefit and reduce your withholding rates. For example, withholding on dividends generally goes down to 15%, and then sometimes even as low as 5% when you're a majority shareholder. So yeah, interest, royalties, then is gains, capital gains, dealing with, you're selling a rental property in the other country and you get gains on that. Independent personal services, which is generally like business, doesn't get used very often. Dependent personal services does get used quite often because this would deal with an employee. So I have an American company, but I have an employee up in Canada. How does that employee pay taxes? Or what if he's traveling back and forth and spends time in both countries? This article specifies that. There's a section on artists and athletes, and I actually plan to do a video on athletes here before too long because of some inquiries that I've been encountering. But yeah, basically, artists. This is performing artists and athletes. They're traveling all over the continent, on throughout the U.S., throughout Canada, honestly, throughout the rest of the world sometimes too. And this specifies how and where these artists and athletes are being taxed. Withholding of tax in respect of personal services deals with more with withholding taxes. Then we get to pensions and annuities. Pensions are usually taxed only by the country of residence, but we have some special rules around U.S. Social Security benefits and the Canada Pension Plan, the Old Age Security. Generally speaking, those are being taxed in the country where you're resident and are exempt in the other country. And then there's actually a reduced rate for U.S. citizens living in Canada um, that are getting Social Security. Government service deals with employees of the government, the respective governments. Students, there's some special rules on students. Sometimes, specifically them being exempt from payments coming from outside their country. A student in America getting payments from someone in Canada, helping pay for their education and training. Exempt organizations deals mostly with charities. Uh, the IRS and the CRA, they generally talk to each other about the registration of charities. So, for example, I'm a president of a not-for-profit in Canada, but then I registered it in the U.S. as well, and it wasn't, automatically granted charity status in the U.S. because I've already received that application, that designation in Canada. Other income is another kind of a catch-all, and then we've got capital. Where are you holding your capital? Deals with that. Then there's the kind of a broad topic of the elimination of double taxation. This is once again sort of a broad, just dealing with the general intent of the treaty. Basically, the treaty is supposed to ensure that income is not taxed in both countries. A Canadian resident earning income in the U.S., you should not be taxed on that same income in Canada and in the U.S. And if you do pay taxes in the one country, you can claim a credit for those taxes in the other country. The way the math works, you're generally you end up paying no more than the higher of the two countries' tax rates. So if one country, if you're paying tax in both countries and one country has a higher tax rate than the other, you'll pay the higher rate. There's a non-discrimination policy here that, first of all, you can't discriminate one nationality against over another nationality, and of course, by gender and race and all that. There's a mutual agreement procedure, which is interesting. This is a procedure to actually help resolve disputes between the two countries, usually dealing with the tax ombudsmen of both countries. So if you feel like whatever situation you've fallen into that it's not fair, or you're being caught by something in the treaty that just ultimately doesn't make sense and it's not fair, you can talk to your tax ombudsman, and they can resolve these conflicts between the two countries. This is usually when things are pretty complex. The last several deal with more practical matters. There's an assistance in collection. Actually, this is sort of a scary one. These next two, assistance in collection and exchange of information. This stipulates that the two countries can and do assist in collecting tax debts. So you owe a bunch of money to the IRS, you cannot escape that by running to Canada. The CRA will help collect that tax debt. Exchange of information also. The CRA and the IRS talk to each other. They share information back and forth. So yeah, like it or not. Diplomatic agents and consular officers is a rule just dealing with, ambassadors and their employees and their workers in the diplomatic corps. Miscellaneous rules is exactly what it sounds like. Limitation on benefits. Just, make sure that you are actually paying taxes. You can't use this to completely get out of paying taxes somehow. Taxes imposed by reason of death deals with The estate tax, which is a thing in the US, is not a thing in Canada. So you might have to deal with this sometimes if you're a US person living in Canada, you have an estate, you have properties on both sides of the border, and you die, we might need to refer to this article as far as limiting how much your estate will pay in taxes. Entry into force is the second to last. It just states the date when the tax treaty went into place, and then termination, which spells out how Canada and the U.S. would terminate this treaty if they would ever have to do that. Yeah, understanding the Canada-U.S. tax treaty can save you a lot of money, can save you a lot of headaches. It's not fun reading unless you're an accountant like me, but it can be interesting to read. Or you just refer to specific articles and just give it a read through if you're curious about something or wondering about something. If you need help navigating these waters, talk to a tax professional who specializes in cross-border tax. Thanks for watching. Don't forget to like, subscribe, hit the bell icon for more tax tips and insights. See you next time.